Now, the economic damage caused by Western sanctions will be on full display when the Moscow stock market reopens. Yes, it's reopening after 4 weeks. Here's what trading looked like before it was suspended on February 28th. Russia's central bank says the exchange will partially reopen. That's important. Thursday morning in Moscow. Trading will resume in 33 stocks only, and that includes major names like Gazprom, Lukoil, and VTB Bank. Timothy Ash is the senior strategist for emerging markets at Bluebay Asset Management, and he joins me now from London. Good to see you to weigh in on this. You argue that no matter how dramatic the reopening will be, it's not a free market right now. It has controls that are firmly in place. So what are you expecting from that reopening? And what in general will be the investment or environment around that market in the weeks and months to come?
I think, like you said, short-term volatility around this is not really that important. Short selling's not allowed. It'll be heavily managed, if anything. And the key story here is that long-term, it's very hard to be constructive. Russian assets in general. Foreigners just don't want to hold Russian assets because of sanctions risk. It's like toxic waste. Now they're trying to get out, if anything. And I think because the longer-term outlook for the Russian economy is now so dire, even with a peace deal in Ukraine, even if it's reached this week, sanctions will be very slow to moderate. Western business, I think, has decided just to get out of Russia. I mean, the geopolitical risks are too high. Self-sanctioning has been pretty remarkable, in recent days. Big companies, Renault, SocGen, big banks are all deciding, it's too high risk to do business in Russia. They're all getting out. So long-term, borrowing costs will be higher, investment lower, growth weaker, and living standards will be declining pretty rapidly because of sanctions and because ultimately of Putin's intervention in Ukraine.
Yeah, and you just laid out there the kind of effects that those sanctions are having on Russia. And yet, can Putin manage to evade some of those sanctions to lessen the blow? I know you've mentioned, Russia forcing payment, for instance, in rubles for its energy. How significant is that?
Well, they're trying to force international business to trade with Russia. At the moment, even activities that are non-sanctioned, not actually sanctioned, a Western international business just doesn't want to do anything to do with Russia. Energy is not sanctioned, but many international oil companies just don't want to have the risk of trading with Russia. So this push to basically force companies to transact in rubles for energy is trying to make companies do the deal, do the transaction in rubles, and make them transact with Russian markets. Even then, I don't think people really want to. The sanctions risk are too high.
Mm-hmm. You talk about an energy war if the conventional one fails. What does that look like?
Well, look, Putin's made it pretty clear. He said Russia's at war with the West. This is a system battle between Western liberal market democracy and kleptocracy and autocracy. Putin's made it that way by the invasion of Ukraine. I think if we think our systems are worth defending, there has to be a cost of sanctions. We have to be willing to bear some of that cost. And the price will be higher energy prices. And you mentioned you had the piece earlier with Jamie Dimon from JP Morgan talking about we need to invest in energy diversification. I think that's absolutely correct. This is about our security, the security of Western liberal market democracy. Putin is challenging that. Energy should not be off limits for sanctions.
Yeah, and I guess there should be a price to be paid at times in order to uphold a lot of those Western values, whether they have to do with the economy or just humanity, quite frankly. Before I let you go, what is your opinion on a Russian default? It has been, talked about, certainly perhaps by mid-April, but what do you think?
Well, the Russians were playing a game of chicken. They had money that was beyond the limit of OFAC, the US Treasury's sanctioned central bank reserves. They've still probably got a couple of $100 billion they could pay. I think they were, again, trying to threaten default and force the issue that portfolio managers would lose money to get them to push the US Treasury to moderate the sanctions regime. In the end, they figured out that if they pushed too far and actually they went into default, that's terrible for Russia long term. A default will mean Russia will be closed out of international capital markets for a decade until Putin goes. So they kind of bottled it in the end. It could still happen. May 25th is the date when the general license provided by Treasury to allow debt service ends. The US Treasury may just decide that this is leverage they're going to force through, and ultimately they're going to push Russia into default to impose a big cost on Putin for the invasion in Ukraine. It could still happen.
Could still happen, but perhaps weeks away. Timothy Ash, thanks so much. Really appreciate it.